Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now, let's look at the 10 mutual funds which own the 5,000 crore rupees of ADAG debt papers, that is, Anil Ambani's debt group. So, as many as 10 fund houses have an exposure worth 5,000 crore rupees to the debt papers of Anil Dhirubhai Ambani's group. Concerns have cropped up after the ADA Group's Reliance Home Finance was downgraded by Care Ratings. The latter downgraded the housing finance company's long term debt program of 4,979 crore rupees to default due to delay in servicing bank debt. RHFL is one of the country's leading private sector home loan companies incorporated in 2008. So, this is a big blow to the company's ratings and the downgrading. The rating was downgraded to Care D from Care Triple B Plus due to delays in debt servicing with some of the banks and factored in linkages between RHFL and its parent company Reliance Capital, according to the report. Instruments with Care T rating are in default or are expected to be in default soon. The company said that RHFL expects to regularize all such repayments shortly. They have completed securitization of over 5,500 crore rupees in debt papers from October 1st, 2018 till date, and they are engaged in active discussions for further securitization and monetization of the asset base. It reassured investors that it is completely current and regular on principal repayments on all its capital market borrowings, aggregating to 7,708 crore rupees. So here are the fund houses which have exposure to Reliance, Anil Dhirubhai Ambani's group debt papers. So here are the list. And as we can see in this list here we have Reliance Mutual Fund, which has the most exposure with a market value total of 1,749 crore rupees. And the next we have the Franklin Templeton with an exposure value of 960 crore rupees. And then after that we have SBI Mutual Funds, which have 787 crore rupees exposure. Then there is UTI Mutual Fund with 669 crore rupees, and followed that by DHFL, which is 415 crore rupees with exposure, and then there's L&T's mutual funds, which have 289 crore rupees in exposure, and then it's followed by the other companies. Whole totally, it there's a grand total of 5,007 crore rupees exposure to Reliance's debt papers. So Reliance Mutual Fund had the highest exposure, worth rupees 1,749 crore rupees, followed by Franklin Templeton, which held around 960 crore rupees. In a response to the query, L&T Mutual Fund, which had an exposure worth 290 crore to Anil Dhirubhai Ambani's group debt papers, stated that CARE has downgraded Reliance Commercial Finance's standalone rating from triple B plus to C or D. We have nil exposure to any of these downgraded instruments. We have exposure to 40 crore of RCFL's NCDs in two fixed maturity plans, which are backed by 100% corporate guarantee of Reliance Capital. Accordingly, their NCDs continue to be rated at par with Reliance Capital and are currently rated at CARE A, which is investment grade and hence valued as per the valuation provided by independent valuation agencies. Now, what's next for this? While Reliance Mutual Fund has taken a call to mark down the debt securities, others are yet to take a call. Ratings downgrades affect mutual fund schemes holding such papers. After downgrades, mutual funds mark down the valuation of debt papers as per SEBI's MTM norms. Like in case of IL&FS and SL Group earlier, Kotak Mutual Fund had marked down the securities by half. In September last year, ratings agency ICRA downgraded debt papers of IL&FS by several notches across maturities. Other ratings agencies such as CARE have also downgraded papers of IL&FS and its group companies. Back then, mutual fund schemes with exposure to IL&FS and IL&FS financial services had to take a 25% markdown on their holdings in these instruments. The net asset value of at least 25 mutual fund schemes were hit after credit rating agencies downgraded the ratings of debt securities issued by IL&FS and subsidiary IL&FS Financial Services. It remains to be seen by how much the two ADAG papers are marked down by mutual funds, how much it affects their net asset values, and how much redemptions come in open debt schemes after this news. For the past 7 months, ever since the IL and FS episode, all categories of lenders in India, including banks, mutual funds, etc., have put a complete freeze on additional lending to HFCs and non banking financial companies, and have instead only been insisting about reduction of existing borrowings. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robot trading software for free.